Great. Well, thank you all for joining. Welcome to the James Beard Foundation's webinar, Pitching Confidently, How to Sell Yourself and Your Idea to Investors. My name is Megan Storms, and I oversee our women's leadership programming at the foundation. I'm joined today by Jen Pelka, who is the co-founder and CEO of Une Femme Wines. Jen, I don't know if you want to say a quick hello before I go into your wonderful bio.
Hi, everybody. It looks like we have a big group here, so thank you all for joining. It's great to be here.
Great. Well, so for a little bit of background on Jen, Jen's career in food and beverage began at Chef Daniel Boulud's New York restaurant Daniel, where she served for over 5 years across a broad range of roles. She went on to lead influencer marketing, content strategy, and media relations, and in-house at Open Table, Guilt Taste, and Tumblr. Jen has been named Forbes 30 Under 30 for food and wine, Details, Digital Maverick, and a Cherry Bomb It Girl. Jen has won an IACP award and also a James Beard Award nominee. Jen was the CEO and founder of Magnum PR and co-founder of the beloved The Riddler champagne bars. Today, Jen is, as I mentioned, the CEO and co-founder of Une Femme Wines, which is available at Target stores nationwide and Delta flights globally, which is super exciting. And Jen is also an active angel investor with a passion for ensuring women have access to capital. So we're incredibly lucky to be joined by Jen. She will give her presentation in just a moment. I'm actually going to share some additional opportunities to connect with the foundation for women in the industry while I have this audience. So the first being our Women's Entrepreneurial Leadership Program. Applications for this next cohort open on May 1st. This is an advanced educational training and networking program for women in the hospitality, geared towards owners of one or more food or beverage business with a brick and mortar location. This is a 10-week virtual program put on in conjunction with Cornell University. I do see that we have a few Well alum in the room, which is wonderful. This is a really great program, and you can learn more by going to jamesbeard.org/Women's Entrepreneurial Leadership Program. And I will also put the link in the chat. So applications for that open May 1. To stay up to date on all of the programming that we have going on, you can sign up for our industry support newsletter, which I will also put a link to in the chat. And the next event I wanted to share with you all for women in the industry, Anna, if you don't mind going to the next one, is our financial literacy workshop for women. Jen was a speaker at our inaugural event this past January, and we'll be hosting it again next January 16th and 17th. It's in New York. It's for women and non-binary hospitality entrepreneurs to sort of take your business, your idea to the next step and give you the sort of financial training that you would need. And so you can check out last year's program schedule and more in this link that we're sharing, and I will also put it in the chat. Tickets go on sale this summer. I'm done with my spiel. You won't have to hear my voice for a while. Jen, I'm going to send it back to you. And I think we'll stop screen sharing this one and move on to the other presentation. But Jen, thank you so much for being with us. Just only bit of housekeeping is for the audience to use the Q&A function if you would like throughout the presentation. We'll also save a good chunk of time for Jen to answer your questions at the end of the session. So Jen, I'm passing it off to you. Thank you so much for being with us.
Great. Well, hi, it's so great to be here. Thank you so much to the James Beard Foundation for hosting these events. They're so incredibly important. And I, as you mentioned, was really fortunate to get to speak at the most recent women's literacy event in New York for women's financial literacy for restaurateurs as part of the James Beard organization and community. And it was just such an incredible day and an amazing opportunity to meet so many women in the food and restaurant space who are doing really interesting things. And the truth is that we still have so much work to do when it comes to access to capital for women, and access to capital for women in the restaurant space is even more lopsided than nearly any other industry that exists. So what I'm going to be sharing today is what I have learned in the process of fundraising for 3 different businesses. I'll get pretty detailed about how much I've raised and the structure of those fundraising vehicles, as well as my overall approach to thinking about fundraising, thinking about the best ways that we drive really drive progress forward for women in the restaurant space. So I'll give you a bit of background as we're pulling up the presentation. I am the co-founder of Unfem Wines now. We focus on women-made champagne and sparkling wines. This is one of our bottles. And we do all wines made by women winemakers that give back to charities that benefit women. Before launching Unfem, I had multiple businesses in the restaurant space that I've also fundraised for. So I'm going to speak about each of those today. So these right here, you'll see are little mini bottles, these 187s, and those are available across the US. I started this company when I had two champagne bars called the Riddler, one in San Francisco and one in New York in the West Village. And what we realized at both of those restaurants was that women want to drink women-made products. They want to eat women-made products. They want to support women-led businesses. And so out of the Riddler was born Unfem. And that's going to be one of the three companies I talk about today. So as I mentioned, I'm going to talk about specifically how to raise money. And I care very much about this because still to this day, only 2%, actually less than 2% of fundraising for Series A level companies goes to women-led companies. Still to this day, if you look at companies that have gone on to go public, there are fewer than 20 companies in the United States that were founded by a female founder and that grew to become a public company on the NASDAQ. It's truly incredible. Like, we still have so much work to do in terms of getting capital into the hands of women. And so I think it's really important for us all to be really transparent with one another about how we do it, the pros and cons of it, and different structures for how we do it. So I hope you walk away from today feeling pretty confident about how to pitch, and I'll share my own experiences. We can go to the next slide. There we go. Okay, great. So the three businesses that I've raised money for were the Riddler in San Francisco, the Riddler in New York, and Unfem. Our two locations of the Riddler were both funded entirely by female investors. So this was something that was pretty unusual. I've heard of more people doing it now, but it's a really, really great tool to build community around the business that you're launching. And I always recommend to people who are raising, use your moment of fundraising to emphasize what makes you different, what makes you unique, what makes you authentically you, because there are a lot of people who are going to want to invest in you because of it. So our San Francisco location was a 500 square foot bar that was sort of a cafe / bar with a full champagne list and little snacks. And we raised a small amount of money for that company. I'll get into the details in a minute. Then from there, after the success of that bar, I raised for the Riddler in New York, which is a much larger raise, a very, very beautiful space, $1 million plus build out in about a 1,500 square foot space. And we had intentions to open many Riddler locations across the globe. We wanted to do San Francisco, New York, DC, London, Tokyo, and beyond. But for each of those, we structured them as individual entities, and we had plans to open many more of them in the future. And then Unfem, I've done through a combination of bootstrapping, a handful of small friends and family raises. Then we did one larger raise, and then we recently closed our Series A. So I'll talk about the specific fundraising rounds for each of those and what the structures look like, what I sold off in the process, and pros and cons of each of them. So we can go to the next. So overall, across those three businesses, I've raised over $17 million. I want to preface this by saying that raising money in and of itself is not like the bigger the number, it's not necessarily like the bigger the win for you. When you go through the process of fundraising, you are selling off equity in your company. So you may need a lot of capital to grow your business, but I would always recommend raising an amount that allows you to accomplish your goals, but is not selling too much of your company. So for the Riddler in San Francisco, we raised $650K. That business was structured as an LLC, a limited liability company. One of the first things you'll want to do is get an attorney to help you to set up your offering documents. And it's pretty typical for restaurants to be set up as LLCs. You want to do this because in the case that you close, you personally have limited liability in terms of investors being able to sue you personally, or even landlords being able to sue you personally. I will say I did get into a landlord dispute in San Francisco, and I did have to, we chose not to go down the route of a full lawsuit with him, but an LLC does protect you in those cases. So that's pretty important. For the San Francisco Riddler, I raised what are called 20K units. So that's essentially like a percentage of the business in a block of $20,000 investments. In that case, I sold off about 80% of the company, which was a huge percentage of the company to sell. But because it was my first business, that was essentially what made sense. And then I also structured these in the form of what's called a preferred return. So for a preferred return business, you are proving to your investors that when they put money into the business, you will be giving them dividends first before you pay yourself. So I promised my investors through the preferred return that as all of our profits were being paid back, we would pay them back 120% of their money before I saw any of the profits. And the way that I raised $650K for that business, before I had ever started any other companies and before I had, real investor confidence that I could run a successful business, is that I put together a list of every woman I knew who might have $10,000 or more. And I met up with each of them individually over coffee or over drinks. I will say drinks are slightly better because people are a little bit looser. And I would first start the conversation by asking them everything about them. What's going on with them? How are they doing? How's their family? What's going on in their business? What are they excited about right now? And just kind of catch up with them about everything on their plate. And eventually they would say, well, what about you? What are you doing? And I would say, oh my gosh, I'm so excited. I'm opening a champagne bar in the heart of Hayes Valley. And I'm so excited. We're going to have only female investors. And I already have $300,000 closed. I already have $10,000 closed. I already have $500,000 closed, whatever the number was at that time. And I'm accepting money from investors at check sizes of $10,000 or more. And almost every single woman who I met with said, what about me? I would love to invest. I had some people say, I don't have $10,000, but I have 5,000. Would you accept that? And of course I said yes. And I also had women who wanted to put in much, much more money. So in the case of the Riddler in San Francisco, our community of female investors was a real lever for getting more women involved. And a lot of women would choose to invest and then would invite their additional friends to invest. And so we had a real community. When I decided to open the Riddler in New York, I used the same strategy to raise 1.5 million. So a much, much larger number. It was a bigger space. We needed a full-scale restaurant, full-scale kitchen. And for that, I sold 50K units, so a larger check size. I did make a few exceptions, but in most cases, I wanted to keep it to 50K or more. And because I had already proven that the Riddler in San Francisco was really successful, it was easier for me to raise for the Riddler in New York. People could go see that space. We had tons of press. We had really amazing traction. And so, of course, the first group that I went back to for the Riddler in New York was my initial investors in San Francisco. And then I also went out to a broader group in New York who were in my network. And something that I did all along was to promote my investors in the press. I would talk about the fact that we had this incredibly supportive female-led investor group. And a lot of women were really excited to come back on board for the second location. So both of those were technically friends and family rounds. That doesn't actually mean that a lot of them were my true friends or any of them my real family, but that's what it's called. It's sort of a colloquial term for small check investors who are essentially angel investors who want to put in money to support you as a founder. For Une Femme, we've raised more than $15 million for that business at this point. Most of it came in the form of growth capital in our most recent fundraising round, which was our Series A, which happened in last year. For that, our first $600K came from 2 checks from 2 private individuals who were investors in the Riddler. So they were women who had already invested in the Riddler, had seen those successes, knew about our community, believed in me as a founder, and they both wrote large checks of $300K each. After that, we got to a point with the business that we were growing and we needed more capital to be able to invest in product that we could make and sell. And I went out to a very, very broad group of people, women, men, folks from all across the country. And for that, I was willing to take like smaller checks as well as large checks. And we found that we had a lot of individual investors who wanted to invest between like 5 and 25K. And I didn't want to have a massive cap table. Your cap table is essentially your community of investors, all of whom have to sign paperwork every single time you do a new capitalization. And so managing all of the legal documentation with every member of your cap table can get kind of cumbersome. So a lot of people try to limit their cap table. So I had heard about something that's called an SPV, a special purpose vehicle. Some people also call it a syndicate. There are many really cool companies now that create syndicates. One great place to find them is called AngelList. A lot of people run their syndicates through AngelList. And the woman who led our syndicate for that round is a woman named Nina Stepanov. She's amazing. She came from VC. She runs it with Nina Kelly. And the two of them have done Kelly Arena. And the two of them brought together a group of hundreds of people with very small checks. They put them together and wrote one very large check for something like $350K. So they only have one seat on the cap table, but that allowed us to bring in small check sizes, first-time investors, BIPOC investors, women investors, et cetera. That was something that was really important to us. We also tapped into what are called family offices. So those are wealthy people who want to diversify their own investments. And they have what are called family offices where they're investing into a lot of private companies, including a lot of like pre-venture backed companies. So we found a few family offices. The way that we found them was by Googling. We just simply Googled family offices that invest in consumer goods, that invest in alcohol, that invest in women, that invest in food products, and put together a massive spreadsheet and did a lot of cold emailing. I also reached out to people through LinkedIn, or the best case is you get a personal intro. So found somebody on LinkedIn who I knew really well, who was connected to them, and got an email introduction. And then our third round, we closed a Series A for $14 million through a combination of 2 rounds. One was what's called a bridge round. So that's when you need some additional capital, but you don't want to do a fully allocated round during that period. You basically want some portion of the money while you're closing the larger amount of money. So it took us over a year to raise that $1 million. So the 600K we had from our 2 very close investors, it took me over a year to raise $1 million. And then I needed another $1 million because we got a huge partnership with Delta Airlines and we needed to produce all of the wines for Delta. And I went back to our existing investors from that $1 million, $1.6 million pool. And what took me over a year to raise, we raised in 24 hours. And the reason why that happened, we raised that additional $1 million because we had so much investor confidence, because we were so communicative with our investors over the year that they were with us. And so I'm a big fan of what's called building in public. So sharing everything, not everything, but sharing some behind the scenes whether it's on Twitter, Instagram, about your business, how it's growing, the highs and the lows, so that other people can learn from you, but also being really open with your investor community, because the more they know about your business and what you're up to on a monthly basis, the more likely they are to follow on with an investor or with an investment. So the 600K came in, the million came in over a year, and then overnight we got another $1 million closed, but we needed another 13 million. So that that price round of the Series A, we had a lead from private equity. We went out to many different private equity, VC funds, family offices, et cetera, to look for one large check. So your lead is like your large check who sets your valuation in what's called a price round. A price round, your lead investor sets what's typically a multiple on your revenue as your valuation. So it's very typical in consumer goods to do something between 3x and 10x your current trailing 12 months of revenue as your valuation. So if you did $10 million in revenue last year, if they're pricing you at a 3x multiple, your valuation would be 30 million. If they're pricing you at a 10x multiple, your valuation would be 100 million. And the reason why you care about your valuation is because the higher your valuation, the more expensive buying into your company is. And that means you're selling off a smaller amount of your equity in exchange for capitalizing the business. So when we went through our process, we created what's called a data room, which is it's literally like an online section. It like we did it in Dropbox. You could do it on Google Drive, et cetera. And you put in the most organized fashion you possibly can all of your business documentation, your tax returns, your P&Ls, your balance sheets, basically like all of your hardcore business documentation so that they can look through it. And we got very far with several private equity firms and VC firms, and we're extremely happy with the firm who led our round. And they put in 10 of the 14 million overall. So the additional 4 came from existing investors and a few new family offices that we had been in touch with. And so I stay in contact with all of these folks constantly. And so for this third company, we have a Delaware C Corp. The reason why we're a Delaware C Corp is that we want to be eligible for what is called QSBS, Qualified Small Business something. I don't know what the S is. But if you are raising a company that you think one day may exit, may sell, you will be subject to capital gains taxes. But if you are a Delaware C Corp, you can forego many of your capital gains if you qualify for QSBS. So if you're going down this route, that's amazing. That's really awesome. Talk to your attorneys as well as anybody who's preparing your taxes to make sure that you're set up for QSBS, because it can be the difference of millions of dollars if you're selling the company for, of course, millions of dollars. We set this one up as 2 safes. Safes are essentially like a promise of future equity. Safes are set up in a way that you don't say what your exact valuation is, but you have a cap, you have a ceiling on what that is. So it's a quick way to get investors in. It's a much smaller set of documentation than something like a priced round, where you have very, very hefty valuation documentation that you have to put together, like hundreds and hundreds of pages. And the way that business is set up is that we do not return dividends as we did in the 2 restaurants. So dividend-based business is structured in a way that when you make profit, you keep some profit in the business, but most of the dividends are going back to your investors. You're paying people back, hopefully the first year, the second year, the third year, the fourth year, the fifth year. In the case of an earnings-based business, like a typical CPG business, a consumer packaged good business, or any kind of venture-backed like tech company, or even a restaurant group that's venture-backed, most likely will be earnings-based, is that overall the value of the company expands over time. And then the moment that people get their money back is if you exit, which means you sell the company or you merge with another company in exchange for money, or you go public. Those are really the 3 ways that happens. In some cases, shareholders can sell what are called secondaries. And secondaries are essentially a portion of their equity in exchange for money. So as a founder, when you go through fundraising rounds, for example, if you do a Series A, it's very typical, it's very customary to sell some secondaries. So if you want to take money off the table, which means you getting money out of the business, you can do that. And I really recommend, especially to women, to really push to sell secondaries or to take money off the table, because you are the person who day in and day out is putting all of your heart and soul into this business. And you don't know if the company is going to sell for $100 million or $20 million or $500 million 10 years from now. And if you've got an opportunity to take some money off the table now, you should. So if anybody's ever considering doing that, I'm always happy to talk one-on-one about my perspective on it. But we did sell a portion of the company. Both my brother and I were co-founders. And so of that $14 million, a portion of that actually went to the two of us selling off some of our equity. So I think it's really important for everybody here who is a founder to remember that you are the asset. You are the person who's putting in all of your time, effort, energy, blood, sweat, and tears into this business. And so when you go out to fundraise, it's really important that you know the ins and outs of your business. It's really important that you educate yourself about all of these potential financial structures, as well as other financial structures of different businesses. You need to know your P&L. You need to know what your cap table, you need to know what your balance sheet looks like. You need to know what your growth curve looks like in the future. But also you have to remember that you have to pay yourself. You have to pay yourself well if you're going to do this for a long time. This is not a hobby. This is a job. This is a business. There are ways that you can run restaurant businesses. There are ways that you can run consumer goods businesses in a way that's sustainable and that you pay yourself well. And if you are in a position to do a Series A, a Series B, a Series C, and you can take money off the table, you should not feel bad about doing it. You should feel great about doing it. Like, that means that there are people who want to buy a piece of your company for a good valuation, and you should feel great about doing it. All right. I know that's a lot of information, but I'm always happy to, in the question and answer period, to answer any questions you might have about some of those technical pieces. There are also many more technical pieces I didn't talk about, but so when you go out to fundraise, I think the first thing you should decide is, what will your business be? What will people say about you? How will people remark about you? This was a tip that I actually got from a food writer, Helen Rosner, who is an incredible food writer at The New Yorker. And I was asking her, what works for you when you see in your inbox pitches from publicists, because I used to have a PR firm called Magnum PR. What actually makes you open your email? She said, it's three things. It's someone or something or some restaurant being the first, the best, or the only at something. And I feel like this is such incredible advice for any of us as we're thinking about running businesses, because it helps us to clarify our own vision, and it helps us to clarify to potential investors, to team members, to the press, who we are and who we want to be. And so we wanted the Riddler in San Francisco to be the first champagne bar in San Francisco. I think it's good to get specific. It allows you to get a little bit smaller about this vision too. So if you want to be the first organic bakery in your town, that is a great first to be. If you want to be the best, like as we grew the Riddler to be a larger restaurant company, our aspiration was to create the best champagne bars in the world and to be the best champagne bar company in the world. And at Une Femme, we aspire to be the only large-scale sparkling wine brand that was built in a champagne bar and not in a boardroom. And I think we accomplished, or at least attempted to accomplish, all of these things. And these kinds of clarifications in your own business can take you a really long way. It's also really great when you go into pitch and say, we're going to create the first, the best, or the only of something. People want to get behind those ideas, and they'll start spreading that mission for you as well as they talk about the kinds of companies that they're investing in. We can go to the next slide. Okay, great. So you, as your first step, you've decided what you're going to be the first, best, or the only at. The second thing that you'll want to create before you go out to fundraise is a deck. They can be as sophisticated or simple as you want them to be, especially if you're raising for your first project. I really recommend thinking of these as a visual guide to what your first, best, or only is. These are screenshots of our first deck for the Riddler in San Francisco. I had a location, but I didn't have the space built yet. And I really used it as a way to highlight to all of our potential investors, you know, the good old fashioned questions of who, what, where, when, and why. Who are we? What is a guest going to experience? Where is it going to be? And on the location note, thinking about building a slide specifically saying like, we're on this corner, we are a corner location, we have great foot traffic. Here are our co-tenancies, meaning here are the other cool restaurants or cool businesses that are right in our area. This is a growing neighborhood because there are these new developments coming in, or this is a really old school area that's really special, or this is an off the beaten path location. And the reason why it's valuable is because we have a low rent, but we know that this is an area with a lot of need for the kind of business that we're going to bring to the program. When it's always really good to create some sort of sense of urgency for people. In fundraising, when you're doing Series A, Series B at that level, a lot of times people will do a roadshow where they literally put together a timeline of, we're going to be meeting with 25 VCs this week, and we need to know by Friday if you're interested. If you're still interested, then we'll provide more information, et cetera. But creating some sort of competition at that level is really valuable. And with a restaurant, a pitfall I've seen pretty consistently is people not setting a deadline, and it's just like stretching out and stretching out and stretching out, such that like when you're opening, you're not fully capitalized or not really partially capitalized, and that can get you into a lot of trouble. So trying to get these ducks in a row early is really helpful. And then the why is so important. Like, why do people care? What's the emotional side of this? What's the storytelling piece of this? Why does this matter to you? Why is this going to matter to consumers? And the why can be as simple as like, this is going to be a really fun place that people are going to want to hang out. The food's going to be delicious. Or this is a product that people are going to want to send to one another as a gift. But you want to make sure that there's certainly an emotional attachment to it. I always think that when putting together a business plan, you of course are going to need to have financial elements to this plan. But what you really want this document to be is like a way to romance your potential investors. Investors generally are going to be investing in you, and they generally, unless they are very unsophisticated, will know that it's very possible that they will not get their money back. I also always advise people when you are out fundraising, like don't take money from anybody who's very, very nervous about getting all of their money back. Like at least in the early stages, people have to understand that it's a risky endeavor to invest as an angel investor in private companies. And so if your investors seem pretty unsophisticated and don't understand that, and they're like mortgaging their house to give you $100,000 for you to open your restaurant, try to avoid that at all costs if you can, because there are other sources of capital out there that will know that even though your business is risky, they'll be prepared for something like that. The third piece is like, you really, really need to understand your business model. A lot of people will ask, so what's the business model? Okay, so what does a business model means? That means, how does your business make money? Are you intending to make a profitable business that will pay dividends back? Or are you intending to create a company that has a lot of value, that the value will grow over time such that somebody will want to buy it down the line? But in either of those cases, like you have to figure out what is the product, what are the margins, how much are you going to sell the product for, who are your competitors, what are other factors in your P&L that you need to think about, like your rent, your cost of goods, your staffing, all of those pieces. So do a lot of Googling, figure out what business models look like for your style of business, study them, look at 10 or 15 of them, and figure out how your own business fits in. If you feel really, really uncomfortable with numbers, I would recommend that you find somebody, maybe it's a co-founder, or maybe it is maybe it is somebody else who you know who understands these things and can put these together for you. Okay, let's move on to the next. This is a great example of something you should know and understand. You should know what your capital budget is. So what all of the costs are going into the building out of your business. Everything from cost of goods to your labor, to marketing, to personnel. This was my actual opening capital budget for the 650K restaurant that I opened. I'm happy to share this. This is the simplest version of something like this, and you should have this absolutely for your business, and should be part of your business plan. This is also a sample P&L. So a P&L is something you should know how to read. You can look at it either on a monthly basis or an annual basis. When you're sharing it, it's good to show both, but this is showing, of course, what your sales are, what your profit is, and then everything that's above and below the line, to get to what you are, how much cash you have left in the bank every year. So make sure you know how to read a P&L and talk about a P&L and get comfortable talking about it. If you know anybody who's in the financial sector, just like practice this and get comfortable talking about all of this. This is essentially your business. I would also include a hypothetical return on an investment in here. So this is a way of showing to somebody, if they put $10,000 in, and if you perform as you just showed them in the previous few slides, this is how long it will take to return their investment. So this was the hypothetical return in my P&L, or in my business plan for the Riddler in San Francisco. We stayed fairly true to this, but sometimes you'll go up, sometimes you'll go down, but people will want to know that you're thinking about this, and you will want to make sure that you are looking at these kinds of returns as you actually run your business, so that you begin to pay people back in a timely manner. And one final piece you'll want to include is what's called an offering agreement. So this is essentially an invitation to investors to invest. Your lawyer can put something like this together for you. You'll see on the left-hand side, this shows people what sort of ownership that they would have. And then on the right-hand side, this is something that's a little bit lighter, that are some of the benefits that we would provide to investors and that I recommend that other people do. So for example, being able to purchase champagne at wholesale pricing, having a dedicated wine locker, having the ability to come to events, complimentary swag, priority seating. I think it's really good to lay these details out for your investors so that you don't run into problems of people coming in regularly and asking for a free lunch or free dinner. Making it really clear upfront what you're happy to give them is a benefit to them. It's not your responsibility to pay for their dinners every single time they come into your restaurant, or to provide free products to your investors whenever they want it. But laying it out up front really helps to clarify that with investors. And then very importantly, write a great pitch email. Write something that is easy for people to forward, that explains exactly what makes your business interesting. So this is my original pitch email that I dug up for the Riddler in San Francisco. So I wanted to send on information in case you might be interested in getting involved. This was something that I would send to somebody after I had met with them. I generally do not pitch with a deck. Some people like to pitch with a deck. I prefer to meet someone, get to know them, get to understand what they're interested in, and share broad vision of what I'm doing, and then follow up with a deck. But everybody's a little bit different. I have found personally that I get a lot further faster with potential investors by having an actual conversation and then following up with information. So here I shared some timeliness. So our lease is signed. We've got a great space. It's in Hayes Valley. We're nearly fully capitalized. Everyone loves hearing that. If you're halfway capitalized, say that. It's like, just always make it sound like the fundraising is going well. Do not tell people if you're feeling super exhausted of fundraising, you're not making the progress you want. Try to avoid at all costs telling people how hard it is. You want people to feel like you are a winner. And even though it is a tough time right now to get investors, you need to instill confidence in people that you're making progress. So avoid saying, I've been fundraising for a year, the market is awful, nobody wants to invest in me. Like, that person's not going to invest in you. Use the same information to say, if somebody says, how has it been? Say, you know what, the market's really tough right now, but we're doing really well. We have 7 people who are invested. They're really excited. They're really behind us. And we're looking for other great people to join in. Same information. You're not lying, but you're just like spinning it in a specific way. Okay, cool. This is, by contrast, a very different pitch email I wrote for our Series A. This is the email that got us a $10 million investment. The most important thing when you're doing something like a Series A is to show massive traction and proof of concept with really key partners. So we mentioned our partners at Delta Airlines, Ritz-Carlton, St. Regis. We linked to a deck in DocuSend. DocuSend is a great tool because you can see how, if people are actually looking at your documents and which pages they're spending time on. It's very inexpensive and it looks very professional. So, or DocSend, excuse me, DocSend is a really, really great option. So recommend that. The most important piece here was showing our sales traction from 1,600 to 6,500 to 100,000 cases. So showing a massive growth curve, which is something that is really attractive if you're in a consumer goods company, and then showing percentage of growth. It doesn't need to be as dramatic as this. The only reason why we had this crazy dramatic increase was because we really lucked out and we're working with Delta and had a big jump because of that. But showing any year over year growth, even if it's 2x growth or 50% growth, you always want to show that in these kinds of fundraising moments, especially if you're going from one round to the next. And then mentioning key press is really good. Also mentioning what the terms are. So we said we're doing a Series A of a $10 million raise in a price round, and the terms will be set by the lead. And then linking again to the deck. So 2 very different businesses, 2 very different times in my life. But I think 2 great pitch emails that were both really successful. A few last things I'll touch on before we open up to questions. So one, I want to say it's really important to develop a really, really great network. So I have been keeping a spreadsheet of people I meet at all kinds of events for over 20 years. I'm now 40, so I guess it's probably been like exactly 20 years. So when I moved to New York and started working in restaurants, I created this spreadsheet. There are different ways of sorting and searching it. It's organized by category. So press and PR, media, creative, F&B. I now have investors. I have all different categories. And I list as much information about them as I possibly can. Including, of course, email, title, company, but most importantly, notes, like where I met the person and how I know them. And so I recommend that you do this. This is a free thing that you can do for yourself. You can start doing it today. And your network is something that you can work with over time. And these are people who, I'm just looking down the list, like Amanda Clute, Ben Leventhal, Paula Forbes. These are people who I still am friends with from literally 10 years ago. I hosted an event with Dana Cowan yesterday. Like, work your network as much as you can, build your network week over week over week, and this will bring you more access to capital than anything else you can possibly do. So do this. As you fundraise, build a great relationship with your investors. We didn't do a good job with this at the Riddler, and this was my biggest learning. This is now something that I spend a lot of time on. Our team and I create monthly investor updates. This is a sample investor update. I also do a little bit of building in the public, as I said, so sharing some things on Twitter and Instagram. But share your wins and your challenges with your investors. And I would recommend doing it on a monthly basis. It gives you great discipline to review all of the progress you're making. And this for me is as I said, the primary reason why I think we were able to raise $1 million literally in 24 hours, because we were so good at communicating what we were working on. And I still hear to this day, wow, you guys do better investor communications than anybody else we work with. So this is something you can do. And this network of investors for you will come back to you again and again and again if you keep them in the loop and keep them in the fold. And the only reason why I still do this is because we got feedback from Riddler investors that they didn't feel included enough. And when we had to close, some were very frustrated. But now this is something I prioritize over almost anything else I do in the business. Okay, few last things. The old Henry Ford quote, whether you think you can or you think you can't, you're right. Remember that it's all up here. Keep pushing, keep going. You can do it. You will find the right people. Be confident, even if you feel shaky, you can do it. There are so many people who have done it. You're really smart. You can do it. And also remember that the road to up and to the right is one of successes and failures constantly. So it's not linear, even if it looks like for other people it is, it isn't. Okay. And I think we're maybe open for questions now.
Yeah. Thank you, Jen. Wow. I wish I didn't have to cut you off, but I see some great questions. So I will jump in here.
Great.
That was really awesome, Jen. As always, you're so kind and generous with your experience. Okay, getting right to questions because we'll have about 12 minutes. First, really quick question: when did you open your first business? I guess the Riddler. Yeah.
The Riddler opened about 10 years ago. I had a few small businesses prior to that never took off, that I never fundraised for, that were not successful. But I opened the Riddler about 10 years ago.
Okay. I'm just going to keep moving through these.
Yeah.
What was your criteria for finding investors? Where did you find them?
Criteria for finding investors, or for like deciding whether or not someone was the right fit. In the first two businesses, anybody who wanted to invest, I happily let into the company. Now I am more disciplined than that. And I do quite a bit of gut checking on whether or not I want this person involved in my company. I try really hard only to let in people who I want to talk to regularly and who I trust and really want to have ideally benefit from the business. I have some investors who are strategic investors, people who can provide a lot of value, who can make great connections, who I can go to when I'm down in the dumps and need some help. And then I have also a lot of investors who just have simply written checks and I barely ever hear from them. But I would say my main criteria has been finding good people who I know that I can rely on and who I trust and who I want in my circle. And the way that I find them is largely through, as I said, that network that I've created over many, many years, and Googling, like literally Googling women who invest in restaurants. Another great source is Twitter. There are so many investors on Twitter who are talking about what they invest in, who are talking about deal flow. Follow them and see what people are up to.
And Jen, I feel like, I don't know if we got to the slide, but when I was looking through your deck, you did have a resource page.
Yes.
Is that maybe something
we can send the deck around to anybody who wants it?
Okay. That was one of the questions, actually.
There are lots of resources. My biggest recommendations for resources are places like the James Beard Foundation. Cherry Bomb does really great resources around restaurants and business. If you are doing a Series A and you need to get really serious, I really recommend a podcast called All In with Chamath and Jason and all these other guys. They're 4 billionaire VCs and they talk about fundraising all the time. So you need to be able to really talk the talk and walk the walk. But if you're raising for a restaurant for $1 million, you don't need to know that level of sophistication. But James Beard Foundation is a really great place to look.
Thank you. I'm biased, but I agree. Okay, we'll keep moving through these questions, and thank you, Jen. I will share the PDF of Jen's presentation with you all, which has wonderful resources that Jen just mentioned that we haven't gone through yet. Okay, more questions. Did you know you wanted to sell at the beginning when you formed your company? If you don't know until later, can you then set up as a Delaware C Corp later on in the process?
I don't know if you can change the style of entity that you have. I imagine that it is possible, and the right people to ask would be your attorney and your accountant or your tax preparer. But in the case of venture-backed companies, it is typically advised that they be set up as Delaware C Corps, or excuse me, as Delaware C Corps. Yes, as Delaware C Corps. See, and we don't know if we want to sell. We might choose to go public, or we might do something else. But it's a good fail-safe in the case that we do.
Okay. I'm going to keep firing these at you because there's many. Once you paid your investors back, did they still own equity in the business?
Yes. So all of your investors will have equity in your business for perpetuity, unless you have written into your offering documents something as an alternative. The two alternatives would be your right to buy them out after some multiple, or if you structure your business, their investment essentially not as an investment, but as a loan. I've seen some people do it. It's pretty rare. And it's very rare for first-time business operators, but it is possible. So it's a good thing to ask your attorney about if you want to set it up that way. Some people are happy to do loans if they know that they'll be paid back. You can also, of course, go to like the SBA or other sources of small business loans. There are also a lot of grants for women. You can find them again just by Googling. There are all kinds of grants that are really amazing. And I know some people who have raised hundreds of thousands of dollars through grants alone, in addition to the fundraising in terms of like selling off equity.
Okay. Did you ever, during your raises, during or before your raises, did you ever lean into debt? How did you decide whether or not to take on business loans or give up ownership, especially if this person's asking specifically with CPG?
We have not done debt for UNFEM. We are currently in the process of looking into a debt raise. Debt is essentially a loan. You can do it from banks, like Silicon Valley Bank was a very famous debt provider for a lot of small businesses, as well as a lot of companies in the wine space. We are going to do probably a small one right now, but what's important to know is that if you take on debt, your debt is generally, you have to pay it back before you pay back investors. So sometimes investors don't love that. And also, you don't necessarily get away from the liability of them in the case that your business closes. Also, capital can be pretty expensive if you are raising debt, depending on what the interest rates are and also what the status of your company is. So there are companies that will do these, like, it's almost like a payday loan. It's like, that can be very, very, very predatory. So be really careful about that. If you're seeing anything that's above a 10% interest rate, stay away from it. If you can get something in the 4 to 10% range, then that's really great. Otherwise, you can also put things on credit cards. Credit cards are generally at something around a 16 to 20% APR, which is high, but you should not take a loan that's higher than that.
Okay. Okay. How much of your financials should you be including in your investment deck? Should it be the same as your business plan or less?
You should be pretty detailed about your financials in a deck, but I would say it's different for a restaurant than it is for a CPG company. A restaurant, I would always recommend including a sample P&L, an opening operational budget, and potentially like a projected balance sheet. Like, you'll definitely want to include those in a restaurant. When it comes to fundraising for a consumer good or a tech company, you won't want to include a sample P&L in there. That's something that will be talked about and looked at in your data room. What you would want to share there more is about your projections of sales. So what your current sales look like, what your sales are going to look like in a year and in 3 years and in 5 years. Those are all purely projections, but they should have some sort of financial model you can back them up with. But for that, you might want to say what your margins are. But I wouldn't include like a full P&L there, but that's a great thing to have in your data room.
Okay, we have time for a few more. A few minutes left. Okay, what part of your company do you actively spend time on, and how much of your time today is supporting or connecting with your investors?
I spend most of my time now on like leading the team internally. So making sure that we are all going in the same direction. That really is a lot of time with me and my executive team, our CMO, our chief sales officer, and my brother, who's my co-founder, who's our COO. So spend quite a bit of time on that. I spend a lot of time on sales, especially brokering relationships with our top national accounts like Delta, Marriott, Ritz-Carlton, et cetera. And then I spend quite a bit of time doing marketing related things, and also especially community building with women in the restaurant space, women in the wine space. So doing what we're doing right now. I spend a pretty small amount of time on investor relations. We've gotten to a point where our monthly updates take me one day a month, and our team is very involved in writing them. And then we have a quarterly board meeting. We have a formal board of directors because we now have a set of Series A investors. So that was contingent, that our deal with them was contingent upon having a formal board. I had never previously had a board, and I would recommend that people wait to have a board of directors until the very last minute, because it takes away some control from you. But board of advisors are great. If you can have advisors who don't have any actual power or control in your company, but who can give you a lot of advice, guide you in the right direction, serve as mentors, that's awesome. I do work with my investors now in a way of like really leveraging them for connections and support. So for example, like us going into Target, I reached out to our board to see who knew people at Target. So you want to use them really as helpful tools, as opposed to like parents checking in on their money. That's not the relationship you want to build with them.
Okay, Jen, for your final question, I feel like this is a good way to sort of wrap. Someone has a smaller project here in Syracuse, New York, total cost of $375,000. I'm having a pitch party next Sunday. What advice can you offer?
Oh, that's awesome. I love the idea of a pitch party. That's so cool. I've never heard that. Have your product available if it's available. Wear something cool that you feel really confident in. Don't drink too much. And surround yourself in that room with people who really support you, including people who will not be there as investors, if you can. If it's a small, intimate thing, maybe have one or two people there who can help you to work the room. If it's a bigger, like true party, like have a couple of people who are your friends who can be there talking about how great you are and how great your thing is. And be warm and open and welcoming, make people have a great time, and talk honestly and from the heart about why you are the right person to build your particular business, and really celebrate the business that you are launching. And remember that you are the asset that people have the opportunity to invest in. You are not asking for a gift. You are giving them the opportunity for potential financial upside and to be part of something really cool that you're starting. So good luck. Keep me in the loop, please.
Thank you, Jen. And I just want to also flag, there were lots of questions, and I want to point to our virtual education library, which has actually more of content from Jen from the financial literacy workshop. We have all the recordings. If you weren't able to attend, still huge value in coming in person and networking and meeting people and hearing it live. But those sessions are recorded, and some of Jen's are on there. So I put it in the chat. Definitely check those out. And we have tons more resources. Like Jen mentioned, we do have a ton of content. And I also mentioned the WELL program and the financial literacy workshop. So much more to come to support you all as women in the hospitality industry, as Jen pointed, is such a crucial group to be moving forward. So thank you so much, Jen. Thank you to everyone who joined. This session will also be on the virtual education library if you missed anything at all. So great. Thank you, Jen, as always.
Thank you. You all can do it. You got it.
It's a great way to end. Okay. Well, good luck, everyone. Have a great evening, day, wherever you are. Okay.
Bye, guys.